IRS just released tax brackets as well as the standard deduction for 2026. What's changing and how should it impact your tax planning? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. We have a progressive tax system here in the United States, and that's not a political term. It's progressive in that as the first chunk of your income is taxed at one bracket, as you make more money, it's taxed at a different bracket and a different bracket and a different bracket. This is one of the things that a lot of people get confused with. If you say you're in the 22% tax bracket, it doesn't mean that all of your income is taxed at 22. It still is that the first chunk, all of your income minus deductions, the first chunk's taxed at 10, but then you filled up that 10% bracket. So the next chunk is taxed at 12%, but you filled up that as well. And the remaining dollars are taxed at that 22% tax rate. So that would be being in the 22% tax bracket. So that's a little fast and dirty about how the progressive tax system works. And so every year, the IRS expands and updates how much income is taxed at those various rates. So they update, well, how much income is taxed at the 10% rate? How much income is in tax at the 12% rate? How much income is in tax at the 22% rate? And so on. And the IRS just released those updated, expanded tax brackets last week. Want to share them with you now so that you can update your planning for 2026, but even factor it into your tax planning here in the fall for 2025. We already know the good news. Tax rates are not changing. The tax rates being at 10%, 12%, 22, 24, and so on, those are staying. They were set to sunset. They were set to expire and revert back to the old tax rates of 10, 15, 25, 28, and so on. But with the tax laws that were passed here in the summer, that sunset, that set expiration date was erased, and now these new tax rates are made permanent. And I say permanent in air quotes because there's no scheduled expiration. These are the rates until Congress chooses to change them, and who knows, they could change them. We'll see. But we'll enjoy these low tax rates until that point. So that's the good news. We know the tax rates, they're staying low. How have the tax brackets expanded? Again, when you're doing this math, you'd look at all of your income, all of your household income that would land on your tax return, and then you'd subtract out your deductions. So things like your 401k, HSA contribution, any student loan interest, those sorts of things, those deductions. And then you would also subtract your standard deduction, which I'll share that update here in just a minute, or your itemized deductions, whichever is higher. So you add up all your income, subtract out your own deductions, subtract out then the standard deduction or itemized, and then that leaves you with a taxable income number, okay? From that taxable income number, in 2026, if you're married filing jointly, then that taxable income number, the first $24,800 would be taxed at the 10% tax bracket, okay? Anything above that, from $24,800 to $100,800, that'd be taxed at 12%. From $100,800 to $211,400, that's going to be taxed at the 22% tax bracket. And if you're married filing jointly, you might feel like, okay, wow, wait, those are bigger than I expected. Yeah, that's about a 3.98% expansion of those tax brackets. For example, the 10% tax bracket here in 2025, married filing jointly, is from $0 up to $23,850. So it expanded by almost $1,000. The next tax bracket expanded by a few $1,000, and about a 3.98 expansion of these tax brackets. That's good because those are supposed to expand based on inflation, and 3.98, that's higher. That's a bigger expansion than what we're currently seeing the calculated CPI to be. That's married filing jointly. If you're a single filer, you're getting that same percentage expansion. The 10% tax bracket goes from $0 up to $12,400 this past year for 2025. That's $11,925. So about a $500 expansion there in that 10% bracket. If you have income stretching beyond that, then the 12% tax bracket goes from $12,400 up to $50,400. The 22% tax bracket from $50,400 up to $105,700, and then the 24% tax bracket $105,700 up to just under $202,000. So those are the tax brackets for 2026. Expanded quite a bit. Not a huge headline, but expanded quite a bit, more than many people expected, and should give you more opportunities to pay more tax at lower tax rates before going to the next tax rate. And then the standard deductions expanding as well for 2026. We know again that the big win was that this huge standard deduction was made permanent with the tax laws passed this summer, but also in that passing, the standard deduction for 2025 was given an extra boost, an extra year of inflation adjustment for 2025, and it was higher than what was originally published for 2025. Well, in 2026, that standard deduction is expanding again. For single filers, it's expanding to $16,100. That's fantastic. That's an increase of about $350. And married filing jointly expanding to $32,200. So putting this all together, married filing jointly in 2026, your total income before deductions could be nearly $135,000 of income jointly. That when you subtract out your standard deduction would get you down to approximately the top of the 12% tax bracket. That's pretty incredible. That $135,000 married filing jointly, you'd still be in the 12% tax bracket in 2026. So that's the update. Not huge, big changes, but an expansion nonetheless, and should help you with your tax planning. The question is, how? How should that impact your tax planning? Should you be doing more Roth conversions? With this news, should you shift from pre-tax to Roth? What do you do with your HSA? Should you optimize your HSA and contribute to that before funding traditional retirement accounts? You got to work with your certified financial planner on this, how these tax brackets shift your planning for 2026, how this clarity should impact your planning for 2025. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. Right there you have it. Go out and take your next wise step in your financial life.